Hey, it's Larry with the Financial Lift, and today I want to go over how to get approved for a home loan and explain the whole entire mortgage approval process. And by listening to some of these tips and understanding the whole entire mortgage approval process, you'll pretty much get as close as you can to 100% guarantee that you'll get approved for a home loan. But at the same time, there's pretty much no consequence if I don't hold my guarantee. Getting approved for your first mortgage, or any home loan for that matter, can be a pretty daunting experience, but that's why I'm here making these videos to help give you some guidance. But as always, if you want more insight to your specific situation, feel free to comment down below and I'd be more than happy to respond. And as always, if you want more videos regarding home buying, please hit that subscribe button. As always, I greatly appreciate every single individual sub out there. So without wasting any more time, let's get into the mortgage approval process. And the first thing you're going to want to understand is the difference between a pre-qualification and a pre-approval letter. So with the pre-qualification, basically a lot of people out there probably have gotten a letter at one point in their life or another, basically saying they're pre-qualified for a mortgage or a refinance, or even another classic example would be something like a credit card, basically getting pre-qualified for something yet you never necessarily applied for it. And the reality is these pre-qualification letters, with regards to mortgages anyways, are pretty informal, non-binding type way. Basically, they're just looking at your credit score and perhaps in some cases your income, and kind of just a ballpark estimate on whether or not you'd be pre-qualified for a loan or not. What you're going to really want to have is what's known as a pre-approval letter. And basically this is still non-binding, but it does carry a lot more weight when it comes to making offers. So just think about this from the seller's perspective. How do I know that you're a serious buyer? If I have two offers on the table, one is say at $200,000 and somebody else comes at $195,000, but they have a pre-approval letter, I'm probably gonna actually go with the offer that has a pre-approval letter. Not necessarily always, some people are paying cash, so obviously that's, a lot more better of an offer. But in some cases where it's a $200,000 offer, but they have no pre-approval letter, no proof that they have funds, how do I know that they're serious? So then if I end up rejecting that $195,000 offer, go with the guy who offered me more money, and then they start going through the mortgage process and they get denied, well, now I have to go back to that other person, that $195,000 offer. They probably already bought a different house, or now I have to put my house back on the market. And so these are things that slows down the process. So from a seller's perspective, they really are going to want to see that pre-approval letter. Now, I should mention here too that being pre-approved does not necessarily mean 100% guaranteed approval if your house that you're trying to purchase is within your pre-approval limit. So let's say you get pre-approved for $200,000 and you make an offer on a $180,000 house. There's not necessarily actually a guarantee that you're going to actually close successfully on that house. A lot of things can change throughout the process. For example, a credit score could significantly change. Perhaps you lost employment, or even just think about the appraisal of the house. Let's say that, once again, you got pre-approved for $200,000 house. The home you're looking at is $180,000. So you're thinking this is definitely in the bag, 100% guarantee. But then after the house gets appraised, it's only appraised at $120,000, and the bank is not necessarily going to approve that. So once again, just keep that in mind. Just because you're pre-approved does not necessarily mean that it's going to 100% close successfully. But at least the good thing about these pre-approval letters is, in general, they're usually good for 45 days all the way up to 90 days. Usually I see it about 60 days. And on top of that, there's plenty of online national banks that you can just fill out from the comfort of your own home. You don't necessarily have to leave anywhere, and you can get a pre-approval letter through email. So there's pretty much no reason why you shouldn't have a pre-approval letter before you actually start making offers on different people's homes. So I want to go over some of the documentation that may be needed to get approved for a mortgage, and some of this documentation may be needed at the beginning during the pre-approval process, or more towards the closing process. So just keep that in mind. Just because it wasn't necessarily requested during the pre-approval process doesn't necessarily mean you shouldn't be gathering that documentation. The very first thing that they're going to want to have is proof of income, not only because they want to make sure that you can actually make good on these payments, but that's going to be a huge determining factor on how much you actually get approved for your mortgage. Banks generally are going to want to see at least 2 years worth of W-2s, or in some cases it's going to be your tax returns instead, especially depending on whether or not you're self-employed or not. And in addition to that, banks may also request recent pay stubs to make sure you're still working there and make sure that you actually are still getting the income level that you claim that you're getting. And on top of that, they may still do some form of employment verification, usually through a third-party company. That's just probably going to call your HR department and make sure you still work there. Or in some cases, if some people get really concerned of people calling up their employer, in a lot of cases, they're actually able to do this employment verification without even having to contact your employer directly. So once lenders establish what your income level actually is, they're also going to want to know the debt side of it. So what is the total amount that you have in terms of your minimum obligation towards towards your debt. So let's say that every month you have to make $200 on an auto loan, and that the credit card balance you have right now, the minimum payment due is, let's say, $100. So that's not necessarily your full statement balance, which I encourage most people, pretty much everybody out there should not be carrying a credit card balance. But if you are, what they're going to factor in is the minimum amount due. So if it's $100, let's say you have $200 on the auto loan, that's $300 every month that you're obligated to pay towards your debt. And this is going to be really important to know, because let's say that you make $1,000, but yet you have $300 worth of minimum payments towards debt. That's actually a worse off situation, because you only are left with $700 than somebody who only makes $800. So, you're making $200 less than the person making $1,000 a month, but yet you have no debt payments. You're actually in a better position than the second scenario where you actually are carrying this debt balance. So what banks are really trying to establish here is what's known as your debt to income ratio. And this is just kind of a general relative guide here, but in general, most lenders are going to want to see around 43% debt to income ratio. So what I kind of mean here is, let's say you make $1,000 in income every single month. Your total debt obligation cannot be more than $430 per month. So the next big thing that lenders are going to care about is your credit score. So what they're going to do is what's known as a hard pull on your credit score. And basically that's going to show up as an inquiry on your credit report. And a lot of people get a little weary about hard inquiries, but it's not necessarily something to worry about too much, especially because a lot of lenders are understanding, or at least a little bit lenient towards people that have, several different hard inquiries, but it's all related to trying to get approved for a mortgage, and it's all within relatively short time spans, because from their perspective they understand that you're probably just trying to compare different interest rates between lenders. But where they do get a little bit weary is when it looks like you're opening up a whole bunch, or trying to open up a whole bunch of different credit cards, because from their perspective they start to look at it and think there's a lot of risk involved here, right? Why are they trying to open up so many different credit cards? Perhaps it's because they lost their job, or maybe they have a spending habit that they need to get in control before they get approved for a mortgage. And I can say this from actual experience as somebody who signs up for several different credit cards to get those sign-up bonuses. You still can get approved even if you do have several inquiries and several new credit cards opened within a relatively short time span. That is, in most cases, it's just something you have to explain away and basically just say, well, you can see on those different credit cards, I don't necessarily carry too large of a balance. I just open them for the sign-up bonus, and then they basically understand, and then they move on. Now, in general, you're going to want to have a credit score of 620 or above, but you can actually get approved with a slightly lower credit score than that. And I actually did a whole separate video on how to get approved for a mortgage with bad credit that I'll link down below. But in general, what I would recommend with people here is that there's plenty of different types of options for different mortgages. So if you're kind of hesitant in trying to buy a home because you believe you have bad credit, or you can't come up with a down payment, or whatever your situation is, I highly recommend go talk to a mortgage officer, or just send an email to a different lender and just see what the different options may be available to you. And then at the very least, at least you'll know what you need to work up to. So for example, you can actually have a really good understanding on what credit score you actually need to get approved for the different mortgage you're looking for. And the last bit of documentation they're going to want to have is basically just a list of all your assets and how you obtain those different assets as well in some cases. For example, they're going to want to obviously see the amount of cash you have available in terms of being able to afford a down payment. So most people in general have about 20% as a down payment on a home, but you actually can get approved with as little as 3.5%, or even in some cases absolutely nothing as a down payment on a home. Those are definitely special instances, but especially with FHA loans, that's pretty much available to a lot of people that I think a lot of people should look into. And you can put as little as 3.5% down on a home. So that's definitely an option there too. So going back to what I mentioned earlier, in some cases, they're going to want documentation on how you obtained especially large deposits into your bank account. So for example, if you ordinarily only make $1,000 a month, but all of a sudden recently you're starting to make $2,000 a month based on your bank statements alone, they're going to want to understand what's this additional $1,000 that just comes in as a lump sum deposit. And, in some cases, a lot of people have parents that want to give them that down payment, which is definitely a completely acceptable thing to say. But in those cases where you're trying to basically boost up your income by having someone deposit funds into your account, that's definitely something they're going to investigate. And that's definitely something that's not looked highly upon. And I'll also mention, just to be thorough, they may in some cases ask for documentation on other assets. For example, your investment portfolio, whether that be 401k, Roth IRA, or whatever investment portfolios you have, they're going to want to know things about that. But in terms of like something like if you have a used car that's just worth like $1,000, they may still ask for that just to kind of be thorough, but it's not necessarily going to impact your mortgage approval process that much. Now, here are a few tips to basically increase your odds of actually getting approved for the mortgage. And probably the tip number one is to basically gather as much documentation as possible right off the bat. So before you even go to a lender or after the initial meeting with the lender, start gathering as much documentation as possible. So if they ask for 2 years worth of tax returns, go ahead and get 3. If they ask for 2 months worth of pay stubs, go ahead and get 3 or 6 months. Provide more. You don't necessarily have to send it to them, but just have it available so that way in case they do ask about it, you can send it right away. Because the more times that you kind of delay the process, the longer this thing is going to take and the less opportunities you're going to have. So if you want to move quickly on a home, that's how you get the best deals on a home, is being able to move quickly. Because, especially in some markets, homes go up for sale one day and the next day they're already off the market. So you want to make sure you can move quickly, and you definitely don't want to be wasting time having to call up a previous employer and try to figure out if they can resend your W-2 because you can't find it, or you're digging through your closet trying to find that old tax return or you can't find it. Those are things you're going to want to avoid as much as possible. The next major tip I want to give to everybody is make sure you talk to a variety of different lenders. And I actually say this for 2 different reasons. The first being that you're going to want to make sure you go with the best lender in terms of best interest rates or best level of customer service. So what a lot of lenders out there will tell you is that pretty much all banks out there are the same. They don't want you to leave the door. They want you to get to, sign an agreement with them. But the reality is even if all banks did have they all charge the same interest rate, which isn't true at all. But if they did, it's absolutely true that some banks are more accessible than others, right? So if you have a local branch that you can drive to that's only a 5-minute drive away, perhaps that's something that's going to be really important to you. Or, versus a bank that's 30 minutes away or 45 minutes away. Or if a bank offers just a little bit better online service, it's a lot, easier to access their online website. That's going to be relevant, especially when you're looking for tax documentation or you're trying to make online payments. Those are things that are going to be really important to you. And the second reason I mentioned, checking out a variety of different lenders is because you want to make sure you find the lender that actually is right for you. So there's a variety of lenders that actually specialize in different mortgages that may cater better to you. So for example, perhaps you're somebody who's buying out of state, or perhaps you're someone who's looking for a USDA loan, a VA loan, all these different types of home loans that are offered, these different options. There are lenders that, cater to all of those different categories, and there are lenders that specialize in a very specific category. And in some cases, you want to go with that very specific category. Let's say once again, you're going for a USDA loan. You're going to want to find that lender that specializes in only USDA loans, because they're going to know the ins and outs of USDA loans versus a national branch that offers a variety of options. They may not necessarily know all the little details, which are going to be crucial, especially when it comes to buying a home. So really make sure you go with the right lender that best fits your needs. The third and final tip I'd give to a lot of people in basically increasing your odds and getting approved for a loan is basically do everything you can to pay off as much debt as possible. Even if it's just a relatively short amount of time, let's say, it's February now and you're looking to buy a home, let's say in 6 months, you can actually pay, even if it's just one credit card off, that can improve your credit score. And on top of that, it impacts that whole entire income to debt ratio. So even if you just pay off a credit card that had a minimum payment every month that was $50 per month, and that may not necessarily seem too significant, but when it comes to that income to debt ratio, that may be, that may qualify you for an additional $25 per month in terms of what type of mortgage you can afford. And when we're talking about $25 per month in terms of a 30-year mortgage, that ends up being thousands and thousands more dollars that you can afford in terms of a home. So I can't stress enough, especially if you end up having some kind of lump sum, additional funds given to you. For example, it could be a tax refund, it could be a stimulus check, it could be, a bonus, whatever it ends up being. It really benefits you to pay off that debt for 3 big reasons. You're getting, the interest savings. You're not necessarily have to paying that interest on that credit card anymore. You're going to boost the amount that you can afford for a home. And on top of that, in a lot of cases, you're going to increase your credit score, which once again results in a better interest rate in terms of a mortgage. So there's pretty much a no-brainer when it comes to, what's the best thing you can do to increase your odds to get approved for a home loan. It's definitely paying off debt. If you appreciate these tips at all, please give this video a thumbs up. I would greatly appreciate it. And as always, if you have a specific situation that you want more advice on, go ahead and comment down below your specific situation, and I'll do my best. I always do my best to reply to each and every one of your comments. It means a lot to me. And once again, if you like personal finance or videos regarding home or car buying or anything related to personal finance at all, please hit that subscribe button. And as always, I hope to see you in the next one.